Hi guys, it's Stock Curry, and in today's video, we're going to do some training on how to make a ton of money in the stock market in 2022, no matter what the stock market does. It doesn't matter if stocks go up or down or even trade flat. You can make a ton of money with the option strategies that I'm going to show you in this video. So let's get into it. Now, before we do, I do want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. So please do your own research before investing in any assets. All right, let me know in the chat if you guys can hear me. Let me know if the audio is good. And then we're going to get into the options training. But before we do, I do want to do a real quick market update. I have one bit of news I want to show you guys, which is kind of crazy. If you guys look at this, the US home prices surged 18.4% in October. Now, think about that for a second. You heard that inflation is running like 6%, maybe 7%. But one thing that the CPI inflation numbers just do not include are things like real estate prices and stock market prices. And the real estate prices surged 18.4% in October. That is just a really clear sign that inflation is much, much higher than what we see in kind of the official CPI numbers. Now, we are going to get the official CPI numbers out next week, and people are expecting them to be the highest, even higher than all of 2021. So just keep that in mind. But yeah, this is just a wake-up call that shows you that inflation is a lot higher than it actually appears to be in the official inflation numbers. Okay, the other thing I want to let you know about with Tesla real fast is that last week Elon Musk said he was done selling, and then on Tuesday he came out and sold, another $1 billion worth of Tesla shares. So he's not quite yet to his 10% target, even though he said he was done again. I do want to let you know he is not yet at 10%. So just keep that in mind. There might be a little bit more selling on TSLA. You saw a little bit of drop because of that, but just even though he says he's done, he could always sell more. We'll just have to wait and see. But he's almost at 10%, so he's getting there. Okay, the last thing, actually, wait, that's it. Let me do a quick channel update for you guys real fast before we get into the official training, because I got some really exciting things coming up. So I have a brand new website that we have just launched. This is stockcurry.vip. You guys can go check it out. The important thing about the Stock Curry VIP, I want to show you guys real fast. And it's not completely all set up yet because I'll be launching some coaching a little bit later, and you'll see this is all like, the lorem ipsum. So that's not quite done yet. The courses, which I'll be launching later in 2022, it's all this coming soon stuff. So now you're still a little bit of work in progress, but the one part I wanted to show you guys right now that is up and running is the Discord. So you guys know that there was a lot of scammers on Facebook. I got sick and tired of it. I decided to shut down everything with Facebook. And in response to that, I still wanted to keep the sort of Facebook group that I had that was free going. And so what I did is I moved it over to Discord. So the We Profit Day and Night Facebook group is now a We Profit Day and Night Discord group. It's free. You don't have to pay for it. But I do have this little apply now button. The reason I did that is I had heard that Discord can get a ton of scammers, and I didn't want Discord to just be overwhelmed with scammers. So what I did is I created this little apply thing. You go in there, you just kind of fill out some basic information. Reality is everybody gets approved, right? Nobody's getting declined. I just put that up there to try to prevent scammers. That's it. So just, apply and you'll get approved. Anyway, you can do that if you want to join the Discord, totally free. You don't have to pay for it or anything like that. And then at the very, very bottom, I told you guys that I was going to be doing a giveaway for the 50,000 subscribers. We'll do a live stream, a big hoopla event where we just celebrate and have fun. And I'm going to be giving away some free stuff. But in order to do the giveaway, I need some way of sending people stuff. So I've got this little button here. It's at the bottom of the page on the new website. It says sign up for giveaways. You just click this little purple button, just put your name and email address, and that'll give me enough information. Then I can export all of those into this program that will randomly pick people to win the giveaways. So as we give away mugs and t-shirts and stuff during the live stream for the 50,000 subscriber celebration, this is how people are going to win those products. So go sign up for giveaways. Through this, we'll also be giving away some free training, maybe some free coaching, just whatever. I'm just going to be giving away stuff, just help you guys out. So if you want to be a part of the giveaways, you can go there and just put your name and email address and sign up. Okay, so that's everything with the new website. Let's go ahead and just get straight into the options training. Real fast, we'll take a look at the pre-market real fast. And right now, it looks like the S&P is up 0.14%, the Dow's up 0.07%, and the NASDAQ is up 0.33%. So it looks like we might get a little bit of a green couple of days coming up. Now, the one thing I did want to let you know is that the Santa rally is coming to an end. So we're not going to see the major massive rises like we've seen. It's going to be more flat. And then Friday, I do expect a red day. Historically, Friday will be a red day because it's the last day of trading for the year, and people are doing a whole lot of tax loss harvesting on Friday. So I do expect some red on Friday. Okay, that's it for the market updates and channel updates. Let's get right into the stock, or not stock picks, the options training. And what I want to do is just in full disclosure, the 3 stocks we're going to talk about. Invest with Henry actually found these as great examples of how to trade. So we're going to get into these and use these as the examples. So the first one that we're going to do is I'm going to use Tesla. And for Tesla, we're going to talk about how to make money if you are bullish on a stock with a credit put spread. But before we do, let me explain why options are so powerful. So I've got this little whiteboard here. And what I want to point out is this. If you were to buy a stock, let's just say you just go out, you buy the stock. You will make money if that stock goes up a lot or if it goes up a little. Those are 2 ways you can make money. Now, if you were to short a stock, you would short a stock if the stock went down a little or went down a lot. Those are 2 ways that you could make money if you shorted a stock. If you were to buy a call option, you only make money one way, and that's only if the stock goes up a lot. And that's actually why call options only make money 20% of the time, because with a call option, there's 80% chance you're going to lose money, only a 20% chance you'll make money. Same thing with a put option. If you buy a put option, you will only make money if the option goes, or if the stock goes down a lot. So with the straight put option, you only have one way of making money. It's a 20% chance of making money. You got an 80% chance of losing money. And of course, the further out of the money you go, the bigger chance you have of losing money and the less chance you have of making money. Now, here's the benefit of the options we're going to talk about today. With multi-leg option strategies, you can make money with 4 out of these 5 things, no matter what the stock does. The stock can go up a lot, a little, trade flat, or even go down a little. And with a credit put spread, you can make money. The opposite is true with a credit call spread. The stock can go up a little, trade flat, go down a little, or go down a lot, and you will make money with a credit call spread. And then if you expect the stock to just trade flat, you can do what's called an iron condor, and you will make money in 3 out of 5 of the different ways. And so that's what we're going to talk about today. I'm going to show you how these actually work and how to actually trade them. So let's start with the credit call or the credit put spread. And with the credit put spread, you will make money if the stock goes up a lot, up a little, trades flat, or goes down a little. So let me show you kind of how that one works. Let's use Tesla for the example. And with Tesla, I do want to point out that so if you think this is going to go up a little bit in the short term, the key is to pick a price that you don't think it will go below. So let's just say that over the next 3 weeks, by the next monthly options expiration, which is January 21st, you don't think Tesla is going to go down by more than $1,000. You think $1,000 is the floor on Tesla. You think within the next 3 weeks, Tesla will be trading at $1,000 or more. So the way you can make money on that in 4 out of 5 ways, rather than just buying a straight call option, which might only make money if Tesla goes up to like $1,200 or $1,300, you could do a credit put spread in which you'll make money if Tesla goes down a little, up a little, or even up a lot. And so here's how that works. And I'm going to show you a graph, and you guys are going to love this. So let's go over to options. And when you go over to options, the first thing in Webull you'll have is the single button here. What you want to do is you want to change this to a vertical. Now, I will let you know, if you're on the phone app, it works the exact same way. You will see a single, just press that, tap that. I think you have to tap it twice. Then you'll get the drop down. You select vertical. Now, once you do that, what you want to do is you want to find a January 21st. So it'll be your 3-week option, right? And we're going to sell a credit put spread. Now, let's say I don't expect Tesla to go below $1,000. So what I'm going to do is I'm going to check this 995/1000 credit put spread. And to sell it, I'm going to click on the green bid button. So we click that, and now we get our order. Now, this doesn't really tell us anything. So let's go over to the graph. All right, so now that we're on the graph, now we can see how we will actually make or lose money with this option. And so what you can see here is that this option has a break-even price of around $998.50. So again, if Tesla closes in 3 weeks on January 21st at or above $998.50, you will make money with this option. The maximum amount of money you would make is $148. The maximum amount of money you would lose is $352. So to show you what your actual profit on that would be, you would have to essentially put up $352 worth of buying power to possibly make $148. So that means it's a 42% profit if you're in the money. 42% in 3 weeks. If you could do that every 3 weeks, you're going to be rich. So 42% would be a profit. And you will make money if Tesla closes at or above $998. So again, Tesla right now is trading at $1,088. Tesla could go down by 9% and you would still make money with this play. So long as Tesla closes at or above $998 within 3 weeks, you make money. So Tesla could go down 9%, you'll make money. It could trade flat, close at 1,088, you'll make money. Go up a little to 1,100, you'll make money. Go up a lot to 1,300, you'll make money. The only time you won't make money is if it goes down a lot by more than 9% and closes below $998. So that is the big, big benefit of doing a multi-leg credit put spread instead of just straight up buying call option or even just straight up buying the shares, is that you make money in a lot more situations. You have a lot higher chance of making money. And on top of that, you make a lot more money because we're talking about a 40% profit on a stock that could go down 7 or 8% or even up. You'll make 40%. Okay, that is the credit put spread. So before we go any further, I do want to ask you guys, do you have any questions about credit put spreads? Now, while I wait for questions, I do want to clarify something real fast. On TD Ameritrade, if you're using TD Ameritrade instead of Webull, TD Ameritrade will allow you to trade options with a cash account. Now, in Webull, you cannot do multi-leg options unless you have a margin account. And you have to have $2,000 in your account to have that margin account. But in TD Ameritrade, Thinkorswim, you can actually trade options without a margin account. Now, if you do, in TD Ameritrade, the amount of buying power you have to put up is not $352. It's actually closer to $50,000 because essentially what they would do is they're actually going to treat this as a cash secured put and then a single buy of a put separately. And so because TD Ameritrade in a cash account would treat it as a cash secured put, you would have to have the money. So actually in this case, it would be $99,500. So if you go into your TD Ameritrade and you try to do this and it says a buying power requires $99,500, it's because you're in a cash account. Make sure you only trade multi-leg options in a margin account. That way your buying power is $352 instead of $99,000. So, one last chance. Does anybody have any questions on the credit put spreads before we move on to credit call spreads? All right, seeing no questions in the comments, let's move on to the next one, which is a credit call spread. So, the beautiful thing about a credit call spread is once again, you make money in four different ways. You can make money if your stock goes up a little, you can make money if the stock trades flat, you can make money if the stock goes down a little, and you can make money if the stock goes down a lot. The only way you won't make money is if the stock goes up a lot. So, again, an 80% chance of making money with a credit call spread. So, let's go in and see what a credit call spread actually looks like in Webull. And for that, we are going to, first of all, clear this trade. And we're going to use Rivian Automotive here. So the reason I'm going to use Rivian is because a lot of people think this is overvalued and they think it's going to continue to drop. So let's say you're one of those people that thinks this is going to continue to drop. With a credit call spread, you want to do the exact opposite thing that you did with a credit put spread. In this case, you want to pick a price that you don't think the stock will go above. So for this example, I'm going to use $120. So let's say I don't think our IVN is going to get above $120 in the next 3 weeks. If that's my thesis and my belief, then what I'm going to do is I'm going to go over to options. And again, it's probably going to start out on single leg. You're just going to switch this to vertical. But this time, because we're going on the bearish side, instead of selling a put option, this time I'm going to sell a call option. And I do need to get down here to around 120. Now, we're going to give this a second to load because this is a lot of information that Webull has to calculate. But essentially, what we're going to try to figure out here is whether it makes sense to do or where to do this. So one thing I want to point out is something called open interest. Open interest is what will allow you to sell your options and then rebuy them later far easier. So the problem is if you have something that doesn't have a whole lot of open interest, then what ends up happening is it's very difficult to sell and very difficult to buy. You lose a ton of money to the bid-ask spread. So you want to find something with a lot of open interest. So I don't think that our IVN will get above $120. Now, I'm not going to do this one because there's no open interest. I'm not going to do this one because there's no open interest. So instead, I'm going to choose the 120, 121. And in the exact same way, I'm going to click the green bid button in order to sell this. And there it is. I'm going to switch over to graphs so we can see what this looks like. And here we go. So with our IVN, if I want to make money, if our IVN closes in the next 3 weeks at or below $120, I'm going to go ahead and sell this credit call spread. And as you can see on the graph, we have a break-even price here of just above 120. So it should be about $120.11. So long as our IVN closes at or below $120.11, I'm going to make money on this option. Now look, our IVN is currently trading at $102. So if we do the math on there, you're going to see that this stock can actually go down. If we're doing 120, we're at 102.87 right now. Our IVN could go up 16.5% and I'll still make money. And it could go down a bit and I'll make money. So look at this. Our IVN could go up 16.5%. I'll make money. It could go flat, down a little or down a lot, and I'm going to make money on this play. So you have a big, big chance of making money. In fact, the odds of making money on this play are about 84%. I've got an 84% chance of making money on this play. And my profit loss here is the most I'll make is $12. The most I would make is 88. Now, that seems like it's not that great of a deal, but you got to understand it's an 84% chance of making money. And if we actually do the math on that, 12 divided by 88, whoops, not that. 12 divided by 88, it's a 13% gain in 3 weeks. Again, if you can make 13% every 3 weeks, you're going to more than double your money over the course of the year. So 13% gain in 3 weeks and an 84% chance of making money. That is a crazy good bet. So with this, again, we just select the green bid button in order to just sell this credit call spread. And we are betting the stock's going to go down or slightly up. And we'll make money if our IVN goes up 16% or less. or down or flat or whatever, will profit 13% on this play 84% of the time. It's a great, great deal. So any questions on the credit call spread, which is a bearish play that allows you to make money in 4 out of the 5 different ways? We'll give you guys a second to ask any questions. And if I don't see any, then we will move on to the last one, which is an iron condor. So I do have a question here. And the question is, do you base your belief in price increase/decrease by doing chart analysis? So every stock is going to be different. For me personally, I look at historical, I look at the fundamentals, and I look at the technicals. For short-term trading, I'm going to rely a lot more on the technicals. And for longer-term trading, I'm going to rely a lot more on the fundamentals. So I hope that answers your question. Obviously, every stock is going to be different. It's just based upon your personal belief. So question here is, can you buy that same option twice? Yes. So when you are in Webull, there's a button here called contracts, and same thing on the mobile version. You can just increase or decrease contracts. So let's say I increase the contracts to 5, for example. That changes my max profit to 60 and my max loss to 440. And you can just change this to whatever. If it's 2 contracts, now I make 24 versus 178. It's the same 13%. Doesn't really matter how many contracts you buy. But yeah, you just make it however many of that option that you want to buy. Okay, so great questions. Let's move on to the very last one, and that is going to be the iron condor strategy. Now, with the iron condor strategy, this one's going to be a little bit different. This is the one that you're going to make money, and if the stock pretty much trades flat. So in this one, you're going to make money in 3 different ways instead of 4. You'll make money if the stock goes up a little, trades flat, or goes down a little. And the iron condor strategy is more powerful than just doing a straight credit put spread or credit call spread, because you will make a lot more money if the stock trades flat. And to explain what an iron condor is, it's really simple. All an iron condor is it's a combination of a credit call spread and a credit put spread combined, with the overlapping being these 3 situations in the center here where you make money if it goes up a little, trades flat, or goes down a little. So all you're doing in an iron condor is you're buying a credit call, or you're selling a credit call spread, and you're selling a credit put spread combined together to give you twice as much profit if the stock trades flat. And that's all it is. It's really that simple. So let's get into the iron condor. I'm going to show you what that looks like. So I'm going to delete this again. We'll go back to single on the chart. And for the iron condor, I'm going to use NVIDIA. And the reason that I'm going to use NVIDIA is, as you guys can kind of see here on the chart, NVIDIA has been range bound for the past couple of months. NVIDIA has been trading in this range, on the low end at $275, on the high end at $335. So again, I'm looking at a range here of $275 to $335. So I want to make money if NVIDIA trades flat. And the way I do that is with an iron condor. Again, we're going to sell a credit call spread, sell a credit put spread, put together. Now, it's really easy to do in Webull. You just go over to options, you select iron condor, and it's going to put it all together for you. Now, these calculations are going to take a little bit longer because now it has to do 2 different legs. But the way I'm going to set this up is, essentially, I want to set this up to get as close to that 265 or 275 to 335 price as possible. And the way I'm going to do that is we're going to pick something close to the money. It doesn't really matter what it is. Just pick anything close to the money, because we're going to have to modify this a bit. And we're going to go over here. Now, the first thing we need to do is increase the width, because I'm looking for a really wide margin of making money here. So I'm going to increase this width all the way up to 20. Okay. So what that does is it increases the bottom and high upper price range that I can make money. So right now you see that we are hitting sort of a midline around 273, which is good, but we're only about 315. So let me bump this up maybe to 30 here. And now we're at about 262. and then we're running about 317. So we got a good width. We're just a little low. So what I'm going to do is I'm going to increase the strike price, and this is just going to bump me up a little bit on the price. And now we're up to 266, 320. We're still a little low. We'll go up a little higher, and we're at right now right around 278, which is what I wanted, and we're right around 332. So we're good here. So by modifying this a little bit, I was able to get the exact range that I'm looking for. Again, on the chart, we notice that NVIDIA trades between 275 and 335. So I want to make money if NVIDIA closes in the next 3 weeks in that price range. So my break even here is right around 277, 277, 275, close enough. And then my upper end is right around 332. And 332, 335, close enough. You could increase the width to 35 and probably get it a lot closer, but this is good enough for me. So the next thing that I want to look at is what my profit loss would be. So if we pull my calculator back up here, we can see that the maximum profit on this is $1,232. And we can see that the max loss on this is $1,768, which would give me an almost 70% profit if NVIDIA closes within this range that it's been trading at within the last few months. 70% profit in 3 weeks. That is crazy. That's so much money. And so this is a really good thing if you got a stock like NVIDIA that's just been range bound and trading flat. If NVIDIA closes at or above $277 and below $333, I'm going to make money on this play. So it's a really good way of making money when you expect your stock to kind of trade flat. You'll make money if it goes up a little, trades flat, or if it goes down a little. You don't really have to know what it's going to do. You just have to know that it's within a certain range. You do an iron condor within that range. And in this case, it'd be a 70% profit, so long as NVIDIA does not have a breakout in the next 3 weeks. Okay, any questions on the iron condors? While I wait for specific iron condor plays, let's go into a few other questions. So one question that Nicole has, it's a great question, is how long do we need to hold? Now, for me, I typically hold right up to about the last day of trading, or maybe the last 2 or 3 days of trading. And the reason is my buying power is still tied up with whatever the max loss is. And a lot of times I want to free up my buying power to go buy something else or to go sell another option. And the option at that point, usually a day before expiration, is going to be very, very close to the max profit. You're usually about 95 to 99% of the way towards your max profit. So in this case, I might close this out the Friday before expiration. I might close this out for like a $1,200 profit instead of a $1,232 profit. Yeah, I missed out on $32, but then I free up $1,768 in buying power to go do something else. And so you can literally let these expire. You do not have to close them out. If you just let them expire, you'll get your maximum profit. But if you want to close them out a day or two early to free up some buying power, a lot of options traders like to do that. So another question here. Do you have to sell or buy the call options before or at the expiration day, or close it by itself on the expiration day? Okay, so I just explained that. You can either close it out or you can just let this expire. It's entirely up to you. And let's see. Okay. Yep. And again, great answer here, Nabin. That's exactly correct. You can close it out a day or two before expiration because the gain from that point on is extremely minimal. Okay. Any other questions on the Iron Condor or any options strategy for that matter? We'll just answer whatever final questions you have, and then we're going to go ahead and end this training. So I'll just give everybody about 1 or 2 more minutes, and then we'll end it. While I am waiting, I just want to remind you guys to hit that like button and subscribe if you haven't already. If you guys are on YouTube, go ahead and click the bell icon next to subscribe. That way you'll get notifications of these videos and any of the other videos as well. So a question here. You do not need to own the stock then. Yeah, that's correct. You do not need to own the stock to trade multi-leg options. That's absolutely correct. Another question here is, do you think buy these 3 options at the same time for the same expiration dates is a good idea for max profit. I wouldn't do all three together. What I would do is I would look at what you expect the stock to do, and then I would pick an option strategy based upon what you think the stock is going to do, and then just do one of them. I wouldn't do all three. That doesn't really, that's not good for maximizing profits. You'll maximize profits by picking a direction and then picking an option strategy to go along with it. Okay, it looks like that is the end of the questions. Thank you so much, DPR3 Chords. I love you guys. Thank you so much for all of your support. I hope this was really helpful to you. If you are watching the replay here, you can go ahead and put whatever questions you have down in the comments below, and I'll try to answer your questions in the comments. Once again, for those of you guys who joined late, we do have the brand new website that is up and running now. It is stockcurry.vip. And on that brand new website, we have the free Discord that has now been mostly launched, still kind of beta testing, but that's stockcurry.vip/Discord. Again, it is completely and totally free. You just have to go apply. Really, the apply is just to stop scammers. That's really the whole point of it. Every single person gets approved, but just apply, and that way we just stop scammers and just make sure it's a real live human person who's actually trying to sign up for the Discord. Also, one more thing real fast. I do have a Rumble channel, rumble.com/stockcurry. Rumble is just an alternative to YouTube, and that's going to be my backup channel. So if YouTube ever shuts down my account for any reason, because they do that to finance YouTubers from time to time, they just shut down accounts. So before you just start, loading up on Twitter with, free Stock Curry, go check out Rumble, rumble.com/stockcurry. If you go subscribe to that channel, that's going to be the backup channel if YouTube ever takes me down. Okay, let's see, just last questions. Let's see. What is the best, I guess you're saying what's the best time to buy an option? So the best time to buy an option is between the hours of 2 and 3 p.m. 2 to 3 p.m. is the best time to buy an option. But remember, all of the option strategies that we talked about today are not about buying options. It's about selling options. And so the best time to sell an option is during the first 30 minutes of trading. And not the first 5 minutes. I'd say between the first 5 minutes and the first 30 minutes of trading. That is when something called implied volatility is at the highest, which means those options are the most expensive. And when options are expensive, you get a lot more money when you sell them. So the best time to sell an option is between the first 5 minutes and the first 30 minutes of trading in the day. Now, if you are not an early bird, if you can't trade in the morning, the second best time to sell is in the last 30 minutes of trading. So hopefully that helps. Again, you make money when selling options, not when buying. When you buy an option, you have a 20 or less % chance of making money. When you sell an option, you got an 80% or higher chance of making money. So you definitely want to be a seller of options and not a buyer. All right, guys, I thank you guys so much. I hope you guys have a lot of success trading. We're going to end it right there. And I will see you guys tomorrow.